Real estate posting the first gains in over a year and a half. Sales jumping 13% in the second quarter. That's according to data from Douglas Elliman and Miller Samuel. The median price of an apartment in New York City hit an all-time record of $1.2 million. Many brokers and developers cheering what they say could be finally a recovery for this market that has seen falling prices and 6 straight quarters of declines. Now, a closer look suggests maybe another reason: taxes. Buyers rushed to close deals in the second quarter to avoid the new tax on real estate sales over $2 million in New York City. That's called the mansion tax. And we know that tax was probably the main reason, because the strength in the quarter came mainly from sales over $2 million. Homes selling for between $2 and $5 million actually jumped 37%. The big question now: how bad would the fall off be the rest of the year? Inventory now at the highest level in 7 years. Sellers of existing apartments offered their biggest price discounts in 9 years. So obviously it was a bit of a mirage. We pushed demand from the third and fourth quarter into the second. Question is, what's going to happen now?
All right, well, let's ask Robert. Stick around. We'll talk more about the state of luxury real estate market. With us now is Noble Black, luxury realtor with Douglas Elliman. Noble, welcome back. Good to see you.
Thanks for having me.
What is going to happen? What do you think? That's
the billion-dollar question, right? Everyone's waiting to see if that was demand that was pulled forward from the third quarter. I think certainly there was a lot of that. But there are a lot of deals that I think people, all of us are doing. So last week I did 5 deals, and that was definitely 4 of the 5 were people that were racing to close the mansion tax. That said, prices have been declining for the last 18 months. So we are starting to get to a place where sellers are getting more realistic. Buyers are coming back into the market. Interest rates are better than they were last year. So there's a lot of external factors besides just the mansion tax that I think is at play.
How big is the mansion tax, for those who don't know?
It's considerable. So it was 1% on anything above $1 million. Now it's going to be anything from 1% to 4%. So it's considerable, particularly if you're looking at something that's $25, $50 million. That's a big chunk of change.
Who pays it?
The buyer has always paid it, but what I think is going to start happening now is you're going to start negotiating it. Splitting it, or maybe the seller takes it. It depends on how strong the market is. But that's all still better than what we were looking at. So I think that's kind of the bright side. There was going to be, what was floated was this pied-à-terre tax.
Who owes the tax? Is it the seller or
the buyer?
The buyer owes the tax.
Yeah.
Up to 4%. Wow.
It's up to 4%. Yeah, so you think about some of these headline deals, and that's a huge chunk of change.
Jeff Bezos,
are people just getting around it, or
Bezos saved over $2 million by doing that deal before July 1st.
If you close before July 1st, you didn't pay it. Now anything else is going to pay that. So some of these headline deals, that's a huge chunk of change.
The big question is, we have over 2,000 new condo units coming online this year. The population of New York City is declining. How is this market going to strengthen? Is there any catalyst that could make it go higher, or at least stabilize in the next 6 months?
I mean, I would imagine foreign buyers have left. A lot of them have left.
They've not. We still have a lot of foreign buyers.
The Chinese?
The Chinese are less than what they were, but if you look at the numbers for last quarter, half of the deals were co-ops, half were condos. Foreign buyers don't buy co-ops for the whole, right? So you take half of the condos. Of the condos, probably half or less were new development, and then a fraction of that is foreign buyers, and then a fraction of that is Chinese. So they make some big headline deals, but it's a very small fraction of what actually supports the market and supports the numbers that we all see.